What's good, YouTube? Welcome back. It's your boy, the one and only. Welcome back to another video. If you wanna learn trading, why don't you come and learn from Siri? Ooh, them vocals. All right, guys, we're gonna do a aftermarket, post-hour analysis of what we had done this morning and pretty much this entire week. What I've been saying is see what happened was I wanted to see price to go up into no, I'm joking. But yeah, back at it again. Today we had Wednesday. We had 10 a.m. USD new home sales and 435. I told you guys this morning, new home sales is a little bit it's not too interesting to me. 435, I mean, we're not even going to be trading at this time, so it doesn't even matter. It was important to note that especially for this economic calendar for this entire week, as we can see Wednesday. Let me go back a little bit. Let me actually zoom in here. Let me see if I can get Monday, capturing Monday. I'm gonna do this week, right? This week was right. Let me see, October 20. Cool. All the way out to 27th. This will be that. All right, cool. So Monday, we had no news. So Monday was gonna be a day where we weren't expecting too much. If anything, we were expecting for Fridays how to be taken. That was a sentiment. So Tuesday, same gig. We were waiting for that Tuesday how to be taken. The Tuesday how was taken on Tuesday. But look at Tuesday's news. We have 9:45 PMI, Flash Services PMI. If you guys watched the other video, as I said before, 9:45 PMI. It don't sound right. Yeah, don't trade during that time. Never trade during this news period. This news right here will blow your account, especially on a Tuesday. Especially, most importantly, on a Tuesday. Tuesday blow accounts. Get that straight, man. And if you're gonna trade Tuesday, see, I'm speaking to myself. If you guys are profitable on Tuesday, man, continue your perfect model, your perfection, your trading, your craft, man. I cannot trade Tuesdays to save my life. Um, Let me not say I can't trade Tuesdays. I could trade Tuesdays. It's just I prefer not to, based off the data. Tuesdays are my worst days, so it's my day off. That's it. It's my day off for the week. Wednesday came in, and as you guys know, this entire week was volatile except for Monday. And of course, we still have Thursday tomorrow and Friday left. But Wednesday in particular, we have news, right? Orange and a red folder, but these aren't really significant, right? Um, Let me not say that Fed Chair Powell speaks is not significant, but it's at 435. If you're trading at 435, bro, you got to take a break, man. You really got to take a walk in the park. You got to walk your dog. You got to take out the trash. You got to do some dishes. You got to listen to your mom. You got to listen to your wife. You got to listen to your husband. You got to listen to your boyfriend. Man, get off the charts. This is not a time to be trading at 435. So we could literally just oversee that news, and it doesn't matter to me. Wednesday, right? Let me go back into the Wednesday conversation. So Wednesday, we have here 10 a.m. news home sales. Not significant. Does a little bit, sometimes, but it's not significant. 435 again, not significant. So what does that mean? There's not really much news today. So today was the perfect day for price to run liquidity because there wasn't going to be much manipulation today. Today was just going to be a day where, like I said, I was expecting a parabolic move, and that's exactly what we got um, after Tuesday hit the consequent encouragement of that imbalance on a daily. So let's go over to our charts and let's forget about our topic of conversation. So just so we can, wow, let me do something here, folks. My fault for the uncleanliness here. What I'll do is I'll put all of these in a group. H1, boom, boom, boom. Yeah, that's H1. And then this right here belongs there as well. Oh, belongs in here. Now I can just do that. Cool. So as you guys can see, consequent encouragement was traded to. I had mentioned that I wanted to see this imbalance not fully filled. But why, bro? This is a fair value gap. Well, if you guys look to the left, we have an efficient range. So we had up, down, price action. So this is for your journal. When we're inside of a efficiently traded range, breakaway gaps are anticipated. Period. Okay. So we had the breakaway gap here. So we're looking for consequent encouragement. And when I say breakaway gap, a lot of people assume that um, it means that you don't want price to go into that imbalance at all, and that's just not the case. What that really just means for me in particular, it just means that price doesn't have to fully fill it, so it will be allowed to be a breakaway gap in the sense that price can break away with not fully filling this imbalance or fair value gap. Okay, so price goes in there, does that on Tuesday afternoon, and then closes below Friday's high, and we close inside of Friday's range and Monday's low, and then it just opens up and we just crash lower. Um, as I said, I'm looking for these levels down here, these relative equal lows, and then we have here a BISI, buy side imbalance, sell side inefficiency, and this order block here. So it's really nice to see it pan out, and we had that speed come in. So that means that order flow is really doing its thing. Tomorrow, if I were to try to trade this tomorrow, Um, I would expect for price to maybe retrace a little bit above Monday's low, but then all in all, just retrace to fall lower and have a continuation move. So the biggest caveat to tomorrow is making sure that we take out Wednesday's low. And if we do that before New York, which we most likely will, because of how relatively close it is to the closing price of this candle, I'm thinking we take that out first and then we retrace a little bit and then we go lower. That's how I see the day panning out. And I actually would be very, I would say it'd be very normal to see price expand to this level. So the next couple of daily candles should be large, um, all the way out to next week, right? This is the last month. Uh, last week to October. Yeah, so this is the last full week to October. So we should see a continuation below. So and I want to see speedy candles. And then again, next month is what I consider Moolah money month. It's the quarterly expiration. So next month should be loud. Um, you guys are gonna be like, but yeah, the next quarterly expiration is in December. But we have something to talk about later on in another couple of videos. I won't talk about it too much now. If I try to break it down right now, it's gonna be too much. So November, I'm expecting a quarterly expiration to take place. And if November decides to chop, then December should be loud. Um, that was a little key secret right there. But anyways, going into the hourly time frame and what we got, of course, I had these levels here shown before the market opened. We had this here. I had mentioned that I wanted to see the mean threshold of this order block and then this rejection block up here. Where did those go? I wonder where those went. Okay, they went right there. So yeah, I have this line right here. I had even mentioned about this internal liquidity, but then what I did was I took just a quick zoom in, right? And remember how I told you guys how realistic is it for price to run up above here? At the moment that I had done the video, which was right here at this opening price, was it realistic for price to go up 70 points, right? And then from the 70 points drop 300 points. I didn't really think that was really realistic. In fact, today's huge expansion lower, like this extra 130 points, I didn't even expect this either. To be quite frank with you, I thought we were going to take out the failure soon, which we did. And then we can go on to the lower time frames on how that looks like right there, because there's something beautiful to learn about this as well. But I was like, is it possible for price to move like 400 points with Nasdaq? It's possible, but also you got to be also realistic in the point that when you're referring to PD arrays, you can't just select the PD array that suits best because you can recognize it. You got to also select PD arrays or premium arrays or discount arrays or any type of trading range based off of the current circumstances. So I always like to keep a realistic approach where I'm looking at the current opening price. The minute that I'm dissecting the price chart, right? Let's say I get on the chart at 7 o'clock. At 7 o'clock, I want to know the opening price of 7 o'clock. And then whatever levels that I panned out or I drew out, I want to tell myself, is it realistic for price to go there? Like is it realistic if I'm looking for sell side delivery and I'm looking for bearish prices, right? I'm looking to short Nasdaq onto Monday's low. I got to also be very realistic on, think factors such as volatility, right? News markers that we talk about on Forex Factory. And if not news, then, opening times, things of that nature. But of course, I had told you guys, it's not very realistic. Now, me wanting to see them take it to the internal liquidity isn't wrong. The concept itself of it going up to internal liquidity is not wrong. That's a very, very realistic, logical, normal approach. Retracement seek internal liquidity, right? But the thing is, how realistic is it? As well as the fact that we're considering it on the fact that we're on an hourly time frame. And also, when you look at this price action as well, one of the biggest things that I was keeping in mind of, I was like, okay, it could go up to this rejection block, but also, is that very likely when we already delivered there 2 times, right? We tested off that 2 times, um, and price kept closing below. Then right here in this price action, we're just creeping lower, breaking through old lows, and then price just keeps trending lower. So I'm like, is it possible? I don't know. But what really gave it off this morning was this, right? On the perspective that if we're inside of an efficient range, listen to me guys real carefully here. I said this on the daily time frame. I'm gonna say it on the hourly time frame because it applies on all time frames. This right here is down, up, down, up. This range right here is efficient. Okay, this is an efficient range. So what can I do here? I can take the highest up close candle in this range here, and the lowest down close candle in this range here, and then we can pan this out as an efficiently traded range. 50%, ding, 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 right there. Order block inside of this range, right? Because a lot of you guys have the mistake of, oh, this is the most recent high, this is the most recent low. No, you got to look at to the left. Look to the left. What price range is the algorithm referring to? And this is what you got here. This high and this low. 50%. And then we have that confluence. So I'm going to take this off. We had the 50%. And then on top of that, we got this, right? Take a closer look. This right here is internal liquidity, and we understand that, and I get that. But then you also have to be realistic. Here we have a fair value gap. We never get to it. We got to it here above this candle's high here, and prices traded lower. So we had a stop hunt. This was the most recent stop hunt here. Here is liquidity above this high. This is internal liquidity, and then price crashes below. So had price closed above this high, and then had a big up candle, then we could have potentially seen this right here, which would have been like 25, 30 points. That would have been very realistic. But then I see price going into the liquidity and snapping back in the range, going into the liquidity and snapping back into the range. This right here is telling me a lot. So when this candle had closed here, it's showing its direction. Had we taken off these wicks, this candle's low or this candle's close closes below this opening price here. So then this right here retraces back into the order block, and then price goes lower. So my entry was literally based off this order block right here, all this information that I had just pointed out to, failure swing right here, fair value gap, and then this failure swing right here, which was my drawn liquidity, and bada bing, bada boom. We had that right there. So I'm gonna go down to the 5 minutes so you guys can see what it looked like on a smaller time frame. So on the 5 minute, I was saying to myself, all right, I'm going to make sure that I focus on higher time frame levels because today was expected to be parabolic. It was the right day because there was not much manipulation, so I expected just lower prices and life was good. I told myself, okay, cool. Putting on overnight session, we have overnight session here. This is our box, right? From 4 a.m. To 8:15. Then price goes and has this order block here. Then we close below the order block. So then again, if this was a liquidity level, we're looking at what here? Our order blocks. So back to the old saying, if you know where the liquidity is at, you know where fair value is at. If you know where fair value is at, you know where your order blocks are going to form. And this is exactly what I mean. We have here accumulation, failure swing, opposing liquidity run. Then we have here a change in the state of delivery. Once we take this candle's low, price is now targeting sell side. Here we have this candle this candle taking the buy side liquidity here. Then price retraces here, and then we just go lower. So once we had this right here, this was our confirmation to put on risk. And so that's exactly what we did. That was also the immediate rebalance on the 1 hour. So any entry above this high after this order block was formed, you're good. You're Gucci. After this is confirmed here, and then anything here, you could have sold and you were straight. And then price just screams lower right off this opening price here. And then right when we got to the drawn liquidity, which was the failure swing on the 1 hour, price decides to chop. And this was also, in particular, remember that my charts are in Chicago time. So these charts in particular were at 10 all the way out to 11. This consolidation, this manipulation was for that entire hour. So we have to put that in mind. Look at that. 10 to 11 manipulation. Then we see price scream lower, right? After we got to the manipulation, and it offered another whopping 160 points, 200 points from this level here, and life is good. So, guys, I think that's our week. And then tomorrow we're going to look for continuation. I don't really see myself trying to do too much for the rest of the week, as we have already captured a great portion of the week, and we still have runners on, and hopefully they just take this slower within the course of the next couple of weeks, and then we will actually gain a lot of opportunity out of that. But guys, I want to thank you for watching this video. Don't want to make it too long because we make that video in the morning. And just remember, guys, that God is good all the time. Thank you for watching. And just remember, guys, good, better, best. Never let it rest till your good is better and your better is best. Have a great day, guys. Bye.